So you and we buy our crypto coins on exchanges, right? But have you heard of this mysterious world called over-the-counter or OTC trading, in which people can buy large amounts of Bitcoins without moving the price at all? Well, if you're curious to learn more about this topic, then this video is for you. Sit back, relax, and just keep on watching. Hi everyone, I'm Kevin from Bitcoin for Beginners. This channel is all about education with no frills nor fluff. So if you're here to learn and are serious about this journey in the crypto world, then you can do us a favor by smashing that like button, subscribing down below, and hit that notification bell as well. Let's dive right into the Bitcoin OTC markets. So on the highest level, what is OTC trading? It's called over-the-counter trading, and basically it's a whole nother market outside of the traditional exchanges that we're so familiar with. It's typically used for whales and larger operators. Doesn't have to be though. And in those cases, minimum order sizes apply, like a $100,000 order or more. And in these markets, there are middlemen that connect and facilitate deals between large buyers and sellers. But just taking a step back, even before crypto exchanges came to be, the default way of trading coins were OTC deals between individuals through platforms like local Bitcoins, for example. And P2P trading, or peer-to-peer, is a form of over-the-counter trading, but in the more current forms of OTC trading, there's usually an intermediary or platform involved. So let's talk about this middleman. They can be individual brokers, trading desks at larger firms, trading platforms like a separate service behind a crypto exchange, dedicated chat groups for whales to find each other, and some brands or examples include Circle, Genesis Trading, itBit, OTC, and also exchanges have services like Kraken, Bittrex, Bitfinex, and OKX. Now, why does OTC trading exist in the first place, and why would anyone want to use it? First reason is liquidity for whales. Because in traditional markets like stocks, for example, there are very few exchanges for an asset, so all of the liquidity is concentrated into one place. In crypto, there are many exchanges spread all over the world, and each of them offer their own order book. And so the global trade collectively is large, but liquidity is largely fragmented. So if a whale wants to execute a single big trade, they could potentially empty the order book in a single move, which causes enormous slippage, which means a bad average price that they buy for, and then this tanks the price on exchanges elsewhere as well. A very notable and recent example happened on May 17, 2019, a flash crash on Bitstamp caused by one trader. His order slashed through the entire order book, wiped out $1,600 worth of price for BTC, which was 20% at that present time, in less than 30 minutes. That's a huge move in such a short amount of time. Some more advantages for traders with OTC. Increased anonymity, because their orders are not visible on the public order books. Price, you can process large orders without disrupting the market price like I mentioned earlier. You can also often negotiate a better price than the market with your counterparty. And also because crypto exchanges are limited, right? You have trade limits, you need KYC approval first, though many OTC desks these days do require KYC, so this is only an advantage for unofficial intermediaries and like P2P chat groups, for example. Additionally, they could use this for manipulation. Whales can use OTC trading to manipulate exchange prices. How they do it is to buy a lot of BTC through OTC methods without affecting the market price, and then dump it on exchanges to suppress the price or vice versa. There's not a lot of fully formed evidence to back this claim, but the general suspicion from the community is of such. And using this method, whales can move prices easily on the market and then use that to take quick profits. However, success is definitely not guaranteed because other whales could counter-trade them and wreck the original whale that's trying to manipulate. So who all uses OTC besides whales, of course? High net worth individuals, institutional investors or hedge funds, private wealth managers, crypto funds, and anyone that wants to trade blocks of like 50K to 100K or more of Bitcoin. Some desks even have higher minimum sizes these days, like Circle has a $500,000 minimum. So let's say you're a whale and you're watching this video. What's the step-by-step process to do an OTC trade? First, you have to make an account and inform your intention of buying or selling X amount of Bitcoin at a certain price. For example, buy 150 Bitcoin at $8,000. And on the platform, there may already be open orders that you can choose from, or add your own order to the order book if it doesn't exist already. Or the broker could give a price quote for your intended trade, or the broker will look for you for interested sellers in their client base, or ask other brokers for referrals. And if both parties, the buyer and the seller, agrees, the broker usually offers escrow services as well to facilitate the deal. Even if you do have peer-to-peer OTC trading, it would be smart to use an escrow service just to make things safe because you're dealing with such a large amount of Bitcoin after all. So OTC trading, this really opaque market that we don't have a lot of visibility into, how big is it? Well, there are reports that say that OTC markets are about 2 to 3x of global exchange volume. But when measured, on-chain volume doesn't seem to match up with the OTC volumes. One big reason why this may be the case is because these trades can be held within the platform and then not require an on-chain transaction as long as they don't need to withdraw their BTC. Furthermore, Liquid Network for Bitcoin is also built for exchanges and trading desks, and they offer confidential transactions which can conceal large transactions from the blockchain. These confidential transactions minimize the influence of large on-chain transactions, which can cause whale alerts if there's a large amount of Bitcoin moving, and that people can trade with that information. So with these confidential transactions, they won't be able to do so. But it also makes it harder to tie OTC activity to on-chain metrics. Hard to measure, but with the data we have, it is safe to assume that OTC trading is at least as big, if not bigger, than all of the exchange trading combined. Because there are signs that whales are indeed moving to OTC more and more these days. And honestly, with all the advantages I listed earlier, I would too. So what are the impact on retail investors like you and I? Well, there are mostly indirect effects to be aware of, like the fact that OTC trading does not have any direct influence on price, but there can be an indirect influence, like traders and brokers asking around could lead to price action if you hear about a big order about to go down. Also, retail speculators can't really do that much about price manipulation, but just be aware about the reality that this most likely takes place and keep that in mind when creating our portfolio, deciding how much to put into Bitcoin and so forth. Also, what is its impact on ETF approval? Remember, the SEC does not like Bitcoin's markets because it has low compliance, a lot of market manipulation, lack of oversight for trading on various markets, exchanges, and even OTC. The concerns are even higher for the OTC than regulated exchanges because there's a lot more opaque and hidden info when it comes to OTC markets. So when more trading volume moves from exchanges to less trusted OTC sources, the SEC definitely won't be happy. And this could lead to more delay for a potential Bitcoin ETF, especially if the SEC is not comfortable with the OTC market's role in the whole ecosystem. What about OTC for guppies like you and I? Can we do it? It's really a wild, wild west within the already wild, wild west world of crypto, because we can do it, but you have to access different chat groups or intermediaries that have OTC related offerings. For example, outside the Bitcoin world, pooling retail investors together to offer an over-the-counter deal, like a pre-sale deal, for example, to ICO investors to purchase tokens that are not going to be available to the public market. The general advice is to stay away from these, especially as a beginner, because these type of OTC deals have a lot of potential for scamming to go on. But besides that, the original OTC, like I said earlier, is P2P trades on local Bitcoins, Paxful, etc. And these can be done relatively safely, but please be careful, use escrow services, try it out, get to know the process before you do a lot. So what are our final thoughts? OTC, or in the broader sense, P2P trading, is originally how Satoshi designed Bitcoin. For retail investors like you and I, exchanges brought us convenience and liquidity. But since the astronomical value rise since 2017, it's been harder and harder for whales to trade on crypto exchanges due to liquidity problems. So there's been increased interest in all of these big players which face the same challenges. So they're moving away from these regular exchanges and back to OTC trading or P2P deals. For retail investors, P2P trading is still available with their own risks. So definitely use trusted platforms with escrow. Stay away from shady and anonymous groups that offer weird deals or ones that just seem too good to be true. Thanks everyone for watching. I hope you learned something from this OTC trading video. Thank you, Adrian, for making this content, for putting all this time into researching this topic. Let us know what else you'd like to learn about, what else you just had in the back of your mind an itch to know about, but haven't taken the time to dive deep and do your own research yet. We will help you out. Let us know what topics you want to learn about, and give us a like, subscribe if you haven't already. This is Kevin, and I'll catch you guys next time.